We are here to address your queries clearly and in a structured way. To keep it simple, we have organized everything category-wise. In this FAQ session, we are focusing on corporate structure, a key foundation when it comes to making informed investment decisions. Your questions are divided into basic, intermediate, and advanced levels. Today, we will start with the basics, the foundation that helps you understand everything that follows. Let us begin. The first question is your company SEBI registered? No, GHL India asset is not registered with the Securities and Exchange Board of India, as the business model does not fall under categories that require SEBI registration. We raise capital through private placement of secured NCDs under Section 42 of the Companies Act 2013, which is a legally permitted route outside SEBI regulated public offerings. SEBI registration is required only for mutual funds, AIFs, portfolio managers, public issue of securities. Our model, private placement, limited investors, not publicly listed. So, SEBI registration is not mandatory. This is a structured private investment, not a public SEBI regulated product. Even though SEBI registration is not required, we follow structured compliance under the Companies Act 2013. Is your company RBI registered? No, GHL India asset is not registered with the Reserve Bank of India, as we are not operating as an NBFC or lending institution. We do not accept public deposits, provide loans as a primary business. Instead, we raise funds through secured NCDs for specific real estate projects which fall under corporate financing structures governed by the Companies Act 2013. RBI registration is required for non-banking financial companies, lending companies, deposit-taking entities. Our model, asset-backed investment, not lending business, not deposit-taking. So, RBI registration is not applicable. We operate as an asset-backed investment platform, not a lending institution. Our structure is governed under the Companies Act 2013 with secured instruments, not under RBI lending regulations. What is the legal structure of GHL India asset? GHL India asset operates as a private limited company incorporated under the Companies Act 2013. This structure ensures defined governance through directors and shareholders, mandatory compliance, audits and filings, legal accountability under Indian corporate regulations. Additionally, investments are typically routed through project-specific structures, SPVs, to ensure A. Segregation of funds, B. Project-level risk isolation, C. Better transparency for investors. You're not investing in an informal setup. You're investing in a regulated corporate structure. Our structure is designed to align with institutional investment frameworks, not retail-level, informal models. Is the company registered under the Companies Act 2013? Yes. GHL India asset is formally incorporated and registered under the Companies Act 2013. This means the company is legally required to file regular financial statements with the Registrar of Companies, conduct statutory audits, maintain proper corporate governance standards, comply with regulatory disclosures. For investors, this ensures transparency, financials are documented and traceable. Accountability directors are legally responsible. Regulatory oversight, not an unregistered or informal entity. If a company isn't registered under the Companies Act, you shouldn't even consider investing. Our SIN, incorporation details, and filings are verifiable with the Registrar of Companies. Are all projects managed through separate SPVs? Yes. Each project is typically executed through a special purpose vehicle, SPV, a legally distinct entity created solely for that specific project. This structure ensures risk isolation, liabilities of one project do not spill over to another, fund segregation, investor money is used only for the intended project, clear accountability, project level tracking of performance and cash flows. In most structured investments, SPVs are designed to be bankruptcy remote, meaning if one SPV faces issues, other projects, and the parent entity are not directly impacted. Investors have a direct claim on that project's assets, not the entire company. Your risk is project specific, not company wide. Our SPV structuring is the same model used in institutional real estate and private equity investments. Who are the key decision makers in the company? The key decision makers include the board of directors and senior management team, who are responsible for strategy, capital allocation, and project execution. Their roles typically include investment decisions, property acquisition, pricing, exit strategy, risk management, legal, financial, and operational oversight, execution control, ensuring projects are completed within timelines. In addition, certain decisions, especially those affecting investor security, are governed in coordination with the debenture trustee to safeguard investor interests, internal compliance, and legal teams. This ensures that decision-making is not arbitrary but structured, documented, and accountable. Your investment isn't managed by individuals. It's governed by a structured decision-making system. We disclose the background and experience of our leadership team through our website, IRMs, and pitch deck to ensure investor confidence. Who controls the SPVs at the operational level? At the operational level, each SPV is managed by directors appointed by the promoter group, along with a dedicated execution team responsible for that specific project. However, control is not absolute or unchecked. It is balanced through defined governance in SPV agreements, restricted use of funds linked only to that project, oversight by the debenture trustee for investor protection, periodic reporting, and audits. This creates a structure where the promoter manages execution, speed, plus expertise. The trustee and legal framework ensure discipline and accountability. Execution is with the promoter. Control is balanced by legal safeguards. SPV bank accounts and fund flows are typically monitored by debenture trustee, ensuring money is used only for that specific project. We trust this has addressed your basic queries on corporate structure. This is just the foundation. Next week, we move deeper, covering intermediate level insights that matter when making serious investment decisions. Stay with us, because informed decisions build stronger portfolios.